Welcome to the Forex, and look here we're looking at the Euro US, and we'd been looking at this yesterday for a move even higher. What we can see now is we can see that we've got an impulse wave here. An impulse is 5 waves, 1, 2, 3, 4 and 5, and after 5 waves comes a corrective wave in 3 waves. So look, we may even get another little high here, but the main point is that we'll see some sort of 3-wave correction that can pull back even to here, 50-60% of the move here. But once that's done, we're looking for support on the 138, and that would be the long trade setup. Of course, you could get it down here early too, but you must be able to recognize that it's in 3 waves. Now, normally we look to the US dollar to sort of confirm things as well, and we can do that, but I can do that now actually, but with the US dollar, we're not really seeing a clear 5 waves down through here, like we're seeing in the euro to the upside. So we can also look, of course, at the US Swissy here, and you can see that this is more of a reflection, a mirror image of the euro. So in here we can see the 5 waves down through here. So sort of considering this being the US dollar, we could consider this coming back be the supply level in here somewhere, the 50-60%, and then rolling over from that point there. So that's something to observe here. So look for that 3-wave correction here, rally, and if that's the case, then look for some overlapping wave structures about here, and then look to go long on the euro, and well, you can even short this market here. The Australian dollar, it's kind of normal when working with Group 1, if we're trading up through Group 1, is to trade to 93 and basically exit at 93, because there's normally a larger correction swings at the number 3 level. And if support is found after that, then we can look higher to 95, the next level. So in the meantime, we have to pretty much just sort of sit tight until we've got until we've seen a correction, we've got support and those sorts of things. The support can take a little while because even if I can just find a bigger picture here from. Okay, so just looking at this chart here, not for any particular reason except for this, is that we've got the arrival to here at 93, then the reaction, and then the first high above the level, and then we normally get the correction move from that point, and then we get it up here. So it's quite a process really to get from resistance to support. There's these swings that have got to occur here, and so really we've just got the arrival through here, but also all through this process here the market really needs to stay above the pivot in Group 1, which is the 2. It's okay for it to spike below here, but we don't want it becoming the retested resistance at that point. If that's the case, then we know that we've got a bearish picture on our hands. So there's a whole lot of swings that have got to occur in through here, and I just suggest that, well, if you're going to be trading this, it's long-term traders will just sit this out because the monthly buying momentum is coming into play, but the weekly and the daily here are overbought. So it is in corrective mode here. So you would really only trade using the sub-levels as such here. Now, if we consider this from the rate section yesterday, if we consider this the first move down from this high here, what we normally wait for to see is if we're going to get 5 waves down or 3 waves down. And so far, if we took this move down from the top here down through here, we'll take that as wave 1 or wave A, and then we've got wave 2 or B, and then we've got 1, 2, 3, maybe the 4 here, and then down to this here for the thing. But basically we've only got 3 waves down so far. So look, it's corrective at this stage. We just really need to allow it to complete. Let's see what we've got. If we get 5 waves down here, then we know we'll get 3 waves back up, and then another 5 down. If we're only going to get 3 down through here, then we're going to be moving up above the level here. So if you're going to go long here, then you'd really want the midpoint here, which is very important, as a nice support here. This will be the 65 back up here. Yeah, and as I mentioned before, this 72 here, this in this case 272, which carries more weight than just normal 72, and that's played out here. So you know, being this over here, you'd be long on this side and you'd be short on this side. It's as simple as that. So, and going back up here, you really want to be long above that as well. You could get to the long from the 50 here, but make sure you've got a nice retested support there. Otherwise, we're going to be coming down into here. And I suggest not to short it in the sub levels here. If you're trading sub levels, you would go long through group 1 here, 1, 2, and 3. You'd go long, but going short through here, yes, you can get away with it, and you can prove me wrong, and we'll probably get a sharp move down. But generally speaking, most of the time, it just bounces. Well, there you go, you started already. It bounces off the top here, hits the next level, and then comes down, bounces, and it's just a very, normally it's a very rough journey, and it's not worth trading here. The markets move the quickest between in both directions, between 3 and 5 and 8 and 5. They're the numbers that you want to trade between, be it long or be it short, if you're using the sub levels, and that goes for bigger picture stuff as well. But there you go. Okay, so the Australian yen, I just sort of look at the bigger picture here, because we've been looking at it since 92, 93 here and being long, and I just see that it's got further to move up through here, and yeah, look, it's got to deal with 95 just yet. So even if it's gone above here, it will eventually come back and work up. But this trend is still moving to the upside. Sorry, here's just the weekly, the bigger picture here, and we're looking for 5 waves, a larger 5 waves up through here. So I lost my chart on that one, so I won't go into that. But the Australian Swiss as well, we were looking yesterday, we noted here that we had 3 waves here. So that's corrective. And then we were looking for support on 82. Yes, we got a spike here, but we didn't get the tested support. It tested it, but didn't hold. So you shouldn't have gone into that. But what I wanted to point out is that this move here, because it's in 3 waves here, it is corrective. So that means that that whatever's happening here is corrective as well. So it could just move straight back up through here. It may come down a bit here first as a wave C here. You could break this down here and look for 5 waves in here as such, and then look for a move up. But what I'm saying is that you get support on that 82, then you want to be trading up to 83 at that stage there. The Euro Australian, well, as you know, we were shorting down into 148 and looking for the bounce. Now, we had this first little bounce here, which was in 5 waves. And if we get 5 waves in the opposite direction, that means we'll get another 5, and that's it there. A little bit dodgy, but it's in there. But this only leaves us with 3 waves here, which is corrective. Now, I mentioned that, well, because it's in 3 waves, eventually this low will be taken out here. But I also mentioned that this is, in the bigger picture, this is a wave 4 rally, and we mentioned that this is a little bit too small for the wave 4. So yeah, look, we've got this move down now. So basically we've got a larger swing here of an A wave, a B wave, and a C wave here. Now, the C wave is always in 5 waves. You know, this looks like wave 1, wave 2 here. This looks like all of wave 3 here. This looks like wave 4, and we'll get a wave 5 to finish up into 14972 area, I guess, you know. However, if the 149 becomes the resistance here, it's okay to trade below it, but resistance is another point. So we could say at 148.72 here, if that became the resistance here, then that would create a short trade down into new lows below here, and then we would have to count this as 1, 2, and then somewhere in here, but it just doesn't fit very well. So just wait out a little bit. But yeah, look, even we get that fifth wave up there, and then you start seeing weakness come down through here, then you can get it at the 49 here and look for shorting here and look for a move lower through here. The euro yen, we're looking at this of trading off the 142 here up to the 143, and that's fine. You can just cover there. There's going to be some corrective patterns coming across it. There's still further to go to the upside here, and I think this is quite interesting really, because once again we could see when we had the bounce off the 140 that we were looking for, we can see that this is in 5 waves to this point here. So this would be like wave 1, and then normally would look at wave 2, and this looking at wave 3 here. But this wave 3 here can't be wave 3 because it's the smallest. It's smaller than this guy here, and it's smaller than this one here. So we need to look at this as in a slightly different light, in a bigger picture. We'll look at this as 1 and 2 here, and then in a smaller degree we'll look at this as 1, 2, and then the third wave up through here. So the third wave, I can see that's just not, it's just not finished yet. It's got further to go here. So this will be the third, the fourth, and then the fifth here, just for the top of the third. So it's still got a fair way to unwind to the top here. So continue looking for long positions, but expect some corrective swings across here first before moving up to the 144. But all good, and you know, you may want to just use the daily robo if that's the case. You know, you'd still be long with a stop back under here somewhere, but you could move your stop up to here would be a safe place. You don't want to move it to here, you might get clipped out, but here should be all right. The pound yen is much the same as well as the euro yen, still sort of pushing to the upside. We're looking at trading up to the 172 here and exiting. The market's really stuck to, it's just a 5-minute chart here of course, but pointing out here that it's still got potential to the upside as long as the 172.20 holds, 122 whatever in here. And then we'll see more to the upside here. So this little pattern in here is corrective, so we should see, it may get bigger here, the correction pattern, but it will move up through here. So you can continue buying through here. Yeah, it's got further to go. So you'll be looking at up at the 173 area, but you're probably better off taking it. No, it should go through that, but there will be problems at the 172, 72 area there. All right, well that's it. Not a lot going on in the FX as the dollar is really just sort of vibrating around that sort of 80 area. Yeah, so alrighty, cheers.